Well, investors were expecting a big number and the miner wasn't about to disappoint. The resources boom produced a bottom line of $22.5 billion, an increase of 86%. Revenue was up 36% as production records were smashed. The result came after the close of the local market, which had an up and down sort of day. Fuelled by a rally on Wall Street, the All Ords bolted out of the blocks but trimmed its gains later to close slightly weaker. Qantas shares dipped 1% despite the airline's bumper results. Investors switched on instead to Seven West Media. A 20% profit increase yielded an 18% boost to the share price. Macarthur Coal shares rose 1% on the back of a 93% profit spike, and Telstra ended the day up nearly 2%. The string of natural disasters earlier this year is buffeting the big insurers. Suncorp has suffered a 42% drop in yearly profits thanks to the Queensland floods and the New Zealand earthquake. But assurances that it could meet all those hefty payouts saw Suncorp shares actually rise nearly 6%. The future's not so bright for many smaller companies. Credit reporting agency Dun & Bradstreet is reporting nearly 3,000 businesses went bust in the 3 months to June, with retailers the hardest hit. Business failures are now at their highest level in 12 months. And as job losses mount here, it's worth noting there have been much bigger and uglier cullings taking place overseas. British retail giant Tesco, for instance, has slashed nearly 1/5 of its massive workforce over the last couple of years, and the US Postal Service has dispatched 40,000 workers. And finally, the Australian dollar continued its hesitant week, edging lower against the greenback and the other major currencies. And that's finance.